Did you know that there are 3 ways that you can contribute to your 401k? But are you doing it the right way? Hi, my name is Dave Grant. This is the 5-Minute Retirement Plan podcast, and thank you for coming back for another episode. So today we're talking about 401k contributions and the different ways you can do it, and are you doing it the right way that's set up the best way for your retirement plan? So let's give you a little bit of insight into the 3 ways you can contribute. The standard one, pre-tax contributions from your paycheck. So the money's going in, it's not being taxed yet. You are deferring that taxation all the way up until the point where you withdraw it for your income in retirement. However much you pull out in retirement, that is considered to be your income that hits your tax bracket, and that's what gets taxed. The nice thing is when you put it into the account, you can obviously invest it and it grows, and then it becomes a nicer amount that you can pull out at the end. The next option is going to be the Roth 401k option. That is the reverse of the pre-tax contribution that most people typically know of. So the Roth contribution is going to be, you're going to pay taxes on the money now that you put it in. It is going to grow just like that pre-tax money that you get invested in. And then when you pull it out at the end, it's all tax-free. So the money that you put in, the amount it grew by, everything that you pull out is tax-free, is not subject to taxation ever again. So the third way you can contribute is after-tax contributions. That is going to be, you are paying taxes on the money you put in, just like the Roth contribution. You're investing it, but when you pull it out in retirement, the money that was contributed in after-tax dollars is pulled out tax-free. The money that invested is actually going to have taxes assessed on it. So it's a little different than doing the Roth version. So I'm sure you're wondering, well, why are we talking about these things? Shouldn't this be for the younger investor who's trying to figure out the right way to do it? Well, it's actually something I come up with people in their 40s, 50s, and 60s, trying to figure out, well, what is the best way for me to invest right now in order to optimize my retirement withdrawals, even if they're, a couple of years away. So let's kind of drill down into what is going to be the best for you. So let's say that you are in your late 50s, early 60s, you're in the peak earning years of your career, you've got a lot of income. Obviously, you're going to want to see if you can drill that tax bracket down a little bit right now. So that's where you're going to do some pre-tax contributions. But let's also look at, well, what if you don't have any Roth contributions yet across any of your retirement accounts? Well, it might actually be the better version of not doing any pre-tax contributions and actually paying the taxes now just to get access to that Roth level of savings. Now, the reason I say that is because when people are earning more money, and they're trying to contribute to a Roth IRA, so not their 401k, they're actually phased out by their income. So they can't actually contribute to the Roth IRA at all. So then their other option is, well, if I want to do it to the 401k, maybe I just do the Roth 401k option, and that way I can get access to some Roth accounts and get some tax-free money later on when I withdraw it. Now, you think that would be the end of the discussion there. Well, there's actually a way for you to get access to doing pre-tax savings. And if you've got money left over, you can actually put money in a Roth IRA through your 401k and actually get access to the Roth IRA, even if you're phased out by your income. Let me tell you how. So this strategy is called the Mega Backdoor Roth IRA contribution. And essentially what you do, max out your 401k with your pre-tax contributions. And if you have more money that you're able to save, you save it in the after-tax version in your 401k. Now, the 401k has an overall contribution limit that's pretty large. Now, right now, we're in 2025, it's roughly $70,000. And that is pre-tax money, contributions by your employer, and after-tax money that you put in. So it's a large limit you can do each year. But let's say you put $20,000 in after-tax dollars in your 401k. Well, you can actually take a distribution from your 401k, it's called an in-service distribution. You can take that after-tax money out, and you can do a conversion of that money into a Roth IRA. And because it's after-tax money, you've already paid taxes on it. So as long as it's not invested, things don't get a little hairy. But then you take that money, you move it into the Roth IRA, and you've actually done a larger contribution than you would do if you did a Roth IRA just normally. And you've been able to kind of beef up that Roth bucket so that when you hit retirement, you actually have a lot of money in there already. So the question I get asked with pre-retirees is there a best way of doing this? The answer is typically yes. Look at your 401k and invest up to the match. So this is going to be pre-tax contributions for the most part. get your company match that are going to be mostly in pre-tax contributions as well, and let's build that part of the 401k. Then I want you to look at and say, well, based on my income, should I be doing pre-tax or should I be doing Roth? What does my income on my tax bracket kind of put me in? Again, we're talking generalities here. Then I would max out pre-tax or Roth, whatever contribution limit level you have left. And then you're going to look at, if I have more money that I can save, now I can do the after-tax contributions, and assuming my 401k allows it, I can move that money straight out again and put it into a Roth IRA. Now, everyone's situation is different. So this is going to be your takeaway. You also need to look at what savings you have currently, what your lifestyle is going to be in retirement and how much you need. And that is going to kind of feed back into what your contribution strategy is going to be. So this isn't a one all and be all strategy for everyone. It's going to be specific to you. So if you need help, this is where financial advisors like myself can come in and we can guide you on the right strategy. If you have any questions, my name is Dave Grant. You can find me at Retirement Matters. But if you don't have any questions, I'll see you on the next episode.